Hello, I'm Robert and welcome to my channel, where I discuss everything automated algorithmic trading, or simply algo trading. What an incredible market we have had lately. As we can see on the screen and looking at the chart, what a beautiful downtrend for some very lovely profits if you are on the short side of the market. Shorting is really my favorite way of trading. It is a way of correcting the market value when I believe the market is overpriced. And as we can see from the number of positions I am holding, I've sold off quite a bit lately and done very generous with it. Long positions are also equally nice when you're in the market, and it is something to really pay attention to when the opportunities are there. But that's not exactly why we are here today. Today I want to talk about finding opportunities through backtesting and some of the problems that I have seen in backtesting that lead me to question the viability of it and my own personal philosophy behind it. Now, backtesting is a very good process if you have the data. And that's the problem. That's really exactly what we're going to talk about today. Backtesting data is difficult to get a hold of in large quantities, especially in the cryptocurrency market, and I'm going to really go in depth into that in a few minutes. That's actually disappointing, to be honest, what I've discovered there. But let's get into the real nitty-gritty details, and that means, of course, going to the VPS. Okay, here we are looking at a backtest of 59 million candles. I've talked about this in previous videos. This is where backtesting really shines, because it lets me take a look at the whole history of the asset with no prior knowledge, or what's often called confirmation bias or survivor bias or look-ahead bias, depending upon what way you want to look at the problem. This gives me an unadulterated, pure mathematical approach of what the market represents. And this really is an incredible wealth of information. But that wealth has a consequence. And that is really what we're going to start talking about. Let's go back up to the top of this and look at some of the data. So here we have some of the data, including the test data I've talked about. And then we get into the stable, consistent data. Let's see where I can find that. Let's get down to where the real meat starts. Okay, this looks like it will be a good enough place. Now, when we look at a trade, we have the time for the purchases and the sells. The purchase and selling, and whether it's a short or a long, depending upon the algorithm we use. Then we have the open, high, low, and closing prices, and the volume. All of this over here is just technical analysis, and we'll get into that shortly. But for now, let's just ignore this exists. Each of the open, high, low, close, and volume in variables give us what we call a candlestick or a K-line. Getting this data has turned out to be much more difficult than I actually thought it should have been. particularly in the cryptocurrency market. It is very disappointing just how little data is available on a large range. It's really why I prefer forward testing as my go-to method for testing new strategies. Simply because I can't get this volume of data to give me meaningful information. And that is a real tragedy. A horrible tragedy, to be honest. Now I'm going to demonstrate a typical backtest with what is the common market standard. And I'm going to use those words carefully because I have found out recently that what is the market standard in the stocks and forex world doesn't apply to the cryptocurrency world. And I don't understand why, because a lot of the companies in the cryptocurrency world use the same people from the stocks and forex world. So let's take a look at a live data pull down and actually see the results. Now, the standard is 5,000 candles at one time. That's roughly 3.5 hours on the 1 minute chart and 17 days on the 5 minute chart. For the 5-second chart, it's a little less. And I think I got those numbers wrong. Okay, I went back and I did the math. A 5-second data set is equal to 6.9 hours. A 1 minute data set is equal to 1.3 days. A 5 minute data set is equal to 17.3 days. And this is all with respect to 5,000 candles. This is not a lot of time for the market standard. Even if you go to services like TradingView and you get one of the most expensive packages they have, you're only going to get 20,000 candles of data. That's not very much. It's certainly not enough to put large amounts of money at risk. You need to really consider the ramifications of your trading. And when you're looking at testing a strategy, at building a methodology that's going to protect your capital, this is not enough data. And one of the things I discovered over the last couple of days in actually collecting data is that the market standard of 5,000 candles that exists within the stock market and forex world does not exist in the cryptocurrency markets. And that is a serious problem. Let's talk about the cryptocurrency world. I have gone through and run a series of tests over 108 different exchanges. And of the ones that provide basic public information for being able to check their data sets, I've come across with a lot of different situations. Now, for this particular test, in getting 5,000 candles, I explicitly asked exactly for and deliberately 4,999 candles. Of the 108 exchanges, only 5 gave me the data I requested. Only 5 exchanges out of 108 followed the market standard. Furthermore, I picked a very clear and purposeful day to which I chose for my data set. and that was January 6th, 2021. All major exchanges should provide that date. And yet, you see results like this. If I asked for 2021, why did the exchange give me 2019? That's just a problem. Here, it gave me 2017, and it only gave me 200 candles. That's the entire history of what it gave me, and it didn't even give me the right date. And on the ones that are empty, and there's a lot of those, they have their framework, but they don't provide any historical information at all. And I haven't even talked about the 19 exchanges that have no framework whatsoever for returning historical data. How can you be expected to produce any meaningful amount of trading data if the data, or any amount of trading profitability, if the data doesn't exist? This is a severe and egregious problem, where they don't follow the market standard. There's no consistency whatsoever. And you can understand some of the more recent exchanges, like maybe this one, where the date is only 2023. If it's a new exchange, it's acceptable. But 100 candles, that's not acceptable. In fact, in this entire list, there's only one exchange that actually gave me the information I really requested. One out of 108. How can anybody be expected to do proper trading with this kind of abysmal data? This is the problem. You can't. Realistically, every single exchange that can't even conform to the basic market expected standards deserves to be put out of business, because they are stealing your money and robbing you by not giving you the tools that are expected in trading. This is really appalling. And we're not talking, small amounts of money here. Some of these people, their fees are obscene. Between the maker and taker fees, they've made themselves multi-millionaires just within 1 year. And yet they can't even provide basic levels of data. That is inexcusable and unacceptable. Let's go back a little further. Exactly what kind of trading can you do, or what kind of analysis can you do with 200 candles? Exactly how can you even formulate a proper trading paradigm? And for the exchanges that don't provide no history whatsoever, that is ridiculous. It would be one thing if the cryptocurrency exchanges didn't pull people in from the stock market and forex markets. But all too often, the largest exchanges on the planet tout how they brought experts in to provide the proper user experience. And yet, this is not the proper user experience. This is an abomination. Straight out, outright, this is bad. And this really is a problem that exists industry-wide. For cryptocurrencies being as old as they are, and the exchanges, some of them like Kraken, KuCoin, Binance, having the level of establishment that they do and the amount of money that they've made from their fees, this is unacceptable. This is outright just disgusting. Having one and only one single exchange provide the proper amount of information with the proper date is appalling. I have to congratulate this one single exchange for being ahead of the game and conforming to market standards and understanding that the most important part of being a trader is accurate data. As far as the rest of the people on this list, there's no excuse. None. It's unconscionable for these people to be in business with this type of performance. It really is. I'm just going to put this on a table straight out. If you're only backtesting with 5,000, 10,000, or 20,000 candles of data, you're gambling. Period. This does not tell you the truth of the market. It does not give you an inclination of just how bad things can get. Whereas when you look at 59 million candles, you clearly see the real world of what happens as a market grows, changes, and dynamically shifts. You should not trade with such paltry examples of 5,000 candles. The best you could say about this kind of technique is that your strategy works. But is it profitable? There's no way to know with this. This is not the way to trade. This is not the way to properly protect your budget, to protect your balance, and to provide meaningful profitability. 5,000, 10,000, 20,000 candles does not provide you enough information to make informed decisions and to really analyze the market in a way that provides you with a proper worst case scenario. Whereas looking at 59 million, 50 million, or the entire history of the asset, whatever that history might be, does provide you with a proper context. Now, the thing of the matter is, this is Euro USD. I did this exact test with Euro GBP. And that's 50 million candles. In both cases, same exact mathematical strategy. So this tells me my strategy is solid. I can now take this strategy with this level of data and paper trade it. But I have seen over the last 5 years of teaching trading, people literally taking 5,000 candles of backtests from TradingView and going into a live market and wondering why they got destroyed. The answer is simple. They got destroyed because they had no idea what the worst case scenario was. They had no comprehension just how bad the market was going to get because they didn't study the history. It is a significant difference when you look at this. Let's take a close look at this chart right here. There are several things that stand out right away. One, the maximum number of open positions. We already know from the backtest this is completely bogus. And this, following this, will decimate your budget. Because most people will think, okay, one position, let's open up a 10% trade. And then they're going to be wiped out and liquidated before they even have a chance to respond. completed number of cycles. This isn't even enough to make an informed decision on whether or not the strategy is viable. You have to have at least 100 completed trade cycles, no less. Let's take a look at the long trades and the short trades, 10 and 6. This suggests that the market is in a long-based trading process. But we already know from the history of the market that this market tends to trade short. And that is a problem. Let's go back to the Euro USD. Here we can see clearly market history favors short trades by quite a bit. 2,964 short trades versus 1,779 long trades. This tells you that most of the time the market is below the median. Now let's look at the P&L. Profitability. Well, profitability is a stark difference between the two markets. 0.06 versus 40 is a drastic difference. But why do people actually fall for these traps? Well, right here. Right here is why. It only took 3 minutes to get this answer. It took 45 minutes to get this answer. And that's trading with a 10 pip take profit, 5 pip deviation. So what if I wanted a 20 pip take profit, 10 pip deviation? That would mean another 45 minutes to get that answer. And people don't want to take the time, so they'll just come here, make a few minor changes, get the answers they want, and magically think the world's going to be perfect. But this is all a complete lie. There's nothing here that you can use for valid testing. There's nothing here that will help you protect your money. This is an illusion. And it is exactly why I don't recommend backtesting on a general basis. Because you don't have access to the level of information you really need to make an informed decision. And getting that kind of information is extremely difficult. You are better served by spending a year running a demo account or paper trading and getting a sense of the market dynamics in real time than trying to follow a phony backtest that's going to wipe your account out. In this case, we can see our worst case scenario was 362 positions. So if you come in with a 10% position size, you're going to wipe your account out. Even if you come in with the market standard of a 1% position size, you're going to wipe your account out. But because of this information for a worst case scenario plan, we can figure out exactly what we need for our position size to protect our balance and to profit even when the market goes completely worst case. And we can survive that in a meaningful way. We also know how much budget we need. For example, if we want to use $10 position sizes, we know we need at least $3,620 of balance. And if you're dealing with a margin and liquidation rate, you need double that, which means you need at least $7,500 to safely trade this strategy in your account and not be liquidated. These are all the kind of things that a proper backtest can give you. That, quite frankly, this will get you destroyed. This will cause you to lose your money. If you use backtesting, please make sure you have the data to back it up. Make sure your data covers a large number of data sets. Don't get caught in the greed of thinking that I could have answers in 5 minutes. No. If you're going to backtest, and I mean really backtest, be ready to put the time into it. And the more complicated the strategy, the longer the backtest. It's not unheard of to have a backtest that could take 24 or even 48 hours to properly and thoroughly analyze the market. Be willing to put the time in and learn from the kind of material that this kind of backtest can give you, because the information can keep you from losing your account. If you trade on small numbers, this right here, looking at what we see at the screen, 5,000 candles. This is going to guarantee you a liquidation. I will bet my entire account on it. Somebody using this to trade with will be wiped out in a matter of no time. They will lose everything, get a margin call, and have their account completely obliterated. Don't follow this trait. Any exchange that doesn't give you proper market standard values, you shouldn't even be dealing with. If they don't have the decency to give you the market standards and provide you with the kind of information you need to make an informed decision, you shouldn't even be dealing with them, because that's not very professional. Even as weak as this is, this does have some meaningful information to it. That is important. It's not enough to risk your money, but it is enough to know that your trading strategy does work. And now you can go through and trade another asset and see how well that asset will do. So let's actually do that. Let's trade Euro GBP, tongue-tied here, and see what these results are. This does give you some meaningful information. 2 different markets, and this strategy worked. That's important. Let's try one more. Let's try USD Canada. Aha! So now we see another problem. But you don't get that if you just test one pair. You have to test a lot. So in looking at what we're doing, you have to think about the consequences of the data. If you don't have the data, do not trade on faulty information. That is the best you can get out of such small amounts of data. We know the strategy works most of the time, but we can see from here there's a problem with it, and the strategy didn't work. Let's try another one. So you see different results, but not enough to justify real money. never enough to justify real money. Even if you go all the way out on a limb with this much data, it is still not enough to justify going directly to real money. Ever. You must always test and test and test. The whole point of algorithmic trading is just that. Constant analysis, reanalysis, and verification. You cannot take anything at face value. Even this situation here. It looks good. The numbers are wonderful. It has a P&L of 17. That's wonderful. But it's not safe to go straight to live trading. Forward test next. If the forward test looks as good as the back test, then go to live trading with small amounts. But only rely on the back test if you have meaningful data. If you can't pull in at least 50,000 or 100,000 candles of data, you don't have enough information. Not without an extensive forward testing regime. And in my own case, I've got 4 different accounts running forward testing on 4 different settings. And I've been running them for over a year. Never, ever use backtesting as a definitive answer. I know this is sounding like a rant, but it really is critical because I see too many people lose their money not applying these critical points. In fact, in the Forex world, there's a saying that's true. 90% of people are going to lose 90% of their money within the first 90 days of trading. And that's because they don't understand the fundamental and critical importance of data. You have to spend the time studying the market. Share your thoughts. Let me know what you think. How do you feel about the revelations of the cryptocurrency markets not providing data, not even really applying or conforming to standards that have been in place for 50 plus years at least? How does that make you feel about trading the cryptocurrency markets? A lot of real investors consider the cryptocurrency markets to be a scam or a fraud just because of that practice. And sadly, the truth is, it does come off that way. When you think about the maker and taker fees you pay on every transaction, to not provide basic data sets is a horrific tragedy. So let me know what you think about that. If you like this kind of detailed video, please hit that like button. If you're not subscribed, please subscribe. It really does help. Thank you for watching, and until next time.